Good afternoon, friends. In this video, we are going to discuss introduction of new return under GST, and that is expected to be from 1st April 2020. Before I come to the new return under GST, it is very important for all of us to understand that we initially started with three returns: GSTR 1, outward supplies, gets auto-populated in GSTR 2A for the recipient, and recipient can do add, modify, delete while filing GSTR 2, and the date was by 15th of next month. And once they do, recipient makes any modification or adjustment or add, that gets auto-populated in GSTR 1A, which need to be either accept or reject by the concerned supplier by 17th of next month. And then we were supposed to file GSTR 3 by 20th of next month. But what is going on today? As on date, presently, we are filing GSTR 1 under section 37, which is outward supplies, gets auto-populated for recipient in GSTR 2A, and there is no GSTR 2 which is inward supplies under section 38, and there is no GSTR 3 under section 39. In place of GSTR 3, we are having GSTR 3B as specified under Rule 61 Sub-Rule 5 of CGST Rule 2017, and this 3B is being stated to be a return under section 39, for which we got litigation, and litigation was whether 3B is a return under section 39. With a retrospective amendment in the rules, it is being stated 3B is a return under section 39 in place of GSTR 3. So presently we have only GSTR 1 gets auto-populated in GSTR 2A and GSTR 3B. And what is now the new GST return which we all are talking about? And this is going to be implemented from 1st of April 2020. Let's listen that now government has made a provision, and these provisions are being stated under section 43A, and this new section got inserted by CGST Amendment Act. New return system under GST as envisaged under section 43A of CGST Act, which is applicable from 1st April 2020. What is going to happen? Let's listen carefully. There will be GST Annex 1. This is outward supply. So what happened? Being supplier of goods or services, you are going to prepare and upload invoice particulars in GST Annex 1 like GSTR 1. And once invoice particulars are being uploaded in GST Annex 1, that gets auto-populated in another form which is called GST Annex 2, which is like inward supply, GSTR 2, similar like GSTR 2. So recipient will be able to either accept, reject or keep the transaction pending in GST Annex 2 on the basis of invoice particulars uploaded by the supplier in GST Annex 1. So Annex 1 is the outward supply, Annex 2 is the inward supply. Now the three return is being stated. One is called normal return, RET1, and this RET1 applicable for such registered person whose aggregate turnover is up to 5 crore a preceding financial year, they can file quarterly. If it is exceeding 5 crore in a preceding financial year, then this would be monthly return. So if you are opting for normal return, then what happened? You would be filing ANX 1, which is outward supply, ANX 2, which is getting auto-populated from ANX 1 of your vendor, your supplier, and then with the ANX 1 outward supply, ANX 2 with the inward supply, you would be consolidating your normal return RET1. And this may be monthly if aggregate turnover is more than 5 crore. This would be quarterly if aggregate turnover is up to 5 crore. This is a normal return. There are two more returns as being stated. RET2, which is a Sahaj, and this is applicable for such registered person whose aggregate turnover is up to 5 crore in a preceding financial year, and they have only B2C transaction, registered to unregistered, with reverse charge liability. They can opt for this Sahaj, which is quarterly return, or you can select Sugam, which is RET3, and this is applicable for such registered person whose aggregate turnover is up to 5 crore in a preceding financial year, and they are having B2B, B2C transaction with reverse charge liability. Now, what is the difference? In all three return, you are filing ANX 1, ANX 2, and these ANX 1 is the real preparation, ANX 2 is the auto population. Then you are consolidating, filing your RET1, RET2 and RET3. Now, who cannot, and what is the difference between RET1 and RET2 and RET3? As I clearly said, RET1 is a normal return, RET2 is a Sahaj, only B2C transaction with reverse charge, and RET3, which is Sugam, it is for B2B, B2C with reverse charge liability. Now this is important for all of us to understand what is the difference between RET1, RET2 and RET3. RET1 is a normal return that can be monthly and quarterly depending upon aggregate turnover, either up to 5 crore quarterly, more than 5 crore monthly. So normal return will have all facilities that you can have B2B transaction, B2C transaction, reverse charge liability, and this is a normal return where you can also take credit on missing invoices. Missing invoices mean the invoices which is not being uploaded. Invoice particulars is not uploaded by your vendor. On that basis, you can avail provisional credit with T plus 2 months criteria. This is a normal return criteria, RET1. But Sahaj and Sugam is applicable to specific taxable person. So in case you are adopting and going for RET2, which is Sahaj, it is applicable only for such person whose aggregate turnover up to 5 crore in a preceding financial year, and it is only for B2C transaction registered to unregistered with reverse charge liability. Now, if you are opting for Sahaj, then it is not possible for such person who are supplying goods through e-commerce operator. And if you are opting for Sahaj RET2, you cannot take credit on missing invoices which was available for normal return under RET1. Sugam RET3 applicable for such person whose aggregate turnover up to 5 crore quarterly, and this B2B registered to registered, B2C registered to unregistered with reverse charge liability with similar restriction not available for such person who is supplying goods through e-commerce operator, or they cannot take credit on the missing invoices. So credit on missing invoices not possible in RET2 and RET3, but available only under normal return filing, which is RET1. So we have discussed broadly the parameter of three broad return post 1st April 2020, RET1 which is normal return, RET2 which is Sahaj, and RET3 which is Sugam. Now what happened in all three cases, you are going to file ANX1 and ANX2 gets auto-populated from ANX1 of your vendor, and then you will consolidate your return, which may be normal return RET1, RET2 which is Sahaj, and RET3 which is Sugam. Now we are going to discuss what are the particulars need to be filled up in GST Annex 1, which is outward supply. Let's listen to it. GST Annex 1, as I said, it is the outward supply. So supplier of goods or services need to prepare and upload. Upload would be online or through an offline route. You can do the preparation and upload the invoice particulars in GST Annex 1. So GST Annex 1 is supposed to be filed by supplier of goods or services. And what all particulars you are going to fill up in Annex 1? Your B2B transaction registered to another registered person, billing from registered to registered recipient, B2C from registered to unregistered, export of goods or services either with payment of taxes or without payment of taxes, or supplies to SEZ unit or developer with payment of taxes or without payment of taxes. Deemed export, wherever supply is made to EOU or against advance authorization or EPCG, export promotion capital goods. These are termed as deemed export, need to be captured in GSTR1. Then you would be capturing your reverse charge. GST Annex 1 will be filled up by such recipient who are liable to pay GST and a reverse charge for notified goods or services. For notified goods, you need to look at notification number 4/2017. If it is services, you have to look at the notification number 13/2017. So reverse charge liability, then import of goods or services. These need to be filled up in GST Annex 1. And thereafter, you have to fill up import of goods from SEZ unit on filing of bill of entry. So these many particulars need to be filled up in GST Annex 1. It is on real-time basis. You can prepare and upload invoice particulars on real-time basis. There will not be any time criteria. As and when you want, you can upload your invoice particulars. When you upload the particulars, that gets auto-populated in GST Annex 2 for your recipient of goods or services for availment of credit. So GST Annex 1 is the important one. Now there are certain other important information for GST Annex 1. Let's listen to those parameters. As I said, there will be uploading of invoice particulars on real-time basis, but you can choose filing of your RET1 monthly if aggregate turnover is more than 5 crore, quarterly up to 5 crore, but these invoice particulars can be uploaded on real-time basis. But what is the last date when you have to file the invoice particulars for a particular financial year? It is being stated it should not be later than earliest of due date. The due date of September month following the end of financial year or date of filing annual return. So earliest of these two dates, you have to keep it to your mind. So for an example, if we are talking about financial year 2020-21, then all the invoice pertaining to financial year 2020-21 need to be uploaded at the earliest of due date. What is that due date? Due date of filing September September month return following the end of next financial year. So September 2021 and September 2021 due date you have to capture, and date of filing annual return whichever is earlier. So financial year 2020-21 annual return going to be due by 31st December 2021. So earliest of due date, so in all probability it would be the due date of September month return following the end of next financial year, and this is on real time basis. Now there would be HSN need to be captured compulsorily. SSC code for services need to be captured at 6-digit level. 6-digit level for large taxpayer. And who are large taxpayer? Whose aggregate turnover in a preceding financial year is more than 5 crore. If you are having turnover up to 5 crore, then HSN and SSC would be optional. This is what stated, and now this HSN would be at invoice label basis. Per invoice label basis, HSN and SSC service accounting code need to be captured at 6-digit level. Even for the import, export, supplies to SEZ unit, HSN need to be captured, SSC need to be captured. It is only optional for the small taxpayer. Now, your taxable value and the tax amount can be shown up to 2 decimal point. Up to 2 decimal point. Now, further it is stated that in new GST return system, a credit note or debit note can be issued for multiple invoices, which is not possible in the existing system of GST return filing. Stated very clearly that a credit note and debit note can be issued against multiple invoices, and that return would be having enable field so as we can issue credit note and debit note pertaining to multiple invoices. In case for this adjustment by way of credit note and debit note, if some value gets negative, then also this negative value would be accepted in GST Annex 1. Having said that, now there's some more point important for GST Annex 1. Place of supply need to be captured for each of the transaction, and it is being stated if supplier registered in a particular state and supplying within that state, that would be intrastate. And for interstate, place of supply need to be captured correctly so that the SGST component of that particular transaction goes to a particular state where ultimately goods and services are being consumed. Having said that, now what happened? We are filing RET1 or RET2 or RET3. Do we require to file Annex 1 and 2? As I said, Annex 1 going to have your invoice particulars, uploading of invoice particulars, and Annex 2 getting auto-populated. Once RET1 or 2 or 3 is being filed, it would be deemed Annex 1 and 2 is being filed. And there is unidirectional flow of invoices. Only supplier going to upload invoice particulars. Recipient will not be given an opportunity to upload. Missing invoice concept is applicable only for RET1. T plus 2 months criteria is being prescribed but not available for RET2 Sahaj and RET3 Sugam. These are the details which I have shared with you for Annex 1, which is outward supply. Now listen what is there in Annex 2 for a taxpayer to comply with. As stated, GST Annex 2 is going to be auto-populated from Annex 1, and Annex 1 is being filed, prepared and filed, means invoice particulars are uploaded by the supplier of goods or services, gets auto-populated in GST Annex 2 along with GSTR 5 and GSTR 6 ISD credit. So what happened? you will be able to see, being a recipient of goods or services, the credit which is flowing from your vendor, your supplier, uploading invoice particulars in GST Annex 1, and it is real time basis. Now you have to take action. Being a recipient, you have to take action. Either you have to accept that transaction or reject that transaction or keep it pending. When you are going to accept, when it is your transaction, you find the details are correct to your satisfaction. When you need to reject, when you find, no, this is not pertaining to you, it is there is something incorrect pertaining to taxable value, tax amount, name of the company, you can reject such kind of transaction or keep pending such transaction. Maybe you got invoice and you can see the invoice in a particular month, but you are yet to receive goods or services. So you can keep such transaction pending till the time you receive goods or services. So being the recipient, you have to take action in GST Annex 2, which is auto-populated from GST Annex 1, accept, reject or pending. What happened in case you are not taking any action? Then in that case, it will be deemed acceptance of invoices unless otherwise rejected or kept pending. Having said that, now comes by when. What is the date by when you can avail credit? It is being stated by 10th of next month. Whatever data, invoice particulars uploaded by supplier in GST Annex 1, you can avail credit. And this credit is available to you by 10th of next month. Having said that, next point comes being a recipient. There is some provision which we need to really understand. In case you are not filing your return and you are a monthly filer, consecutive 2 months returns are not being filed by you, then your credit entitlement would be denied in GST Annex 2. And if it is quarterly, one period return is not being filed, then credit is not available, entitlement is not given to you in GST Annex 2 for availing the credit. And as I said, it's a unidirectional, meaning thereby if invoice uploaded by the supplier, invoice particulars uploaded by the supplier, if there is any correction, then these correction need to be done by only supplier. At most you can reject that transaction so that supplier can correct and then upload the particulars either in the same month return or subsequent month return. So this is GST Annex 1, Annex 2, which I have discussed with all of you. Now coming to the three important parameter of RET1, RET2 and RET3. Government is going to give us staggered date for filing our monthly and quarterly return. So maybe government going to decide for monthly filer, there would be most probably 18th of next month, and if it is quarterly, it will be 25th of the next quarter, staggered date, so that they can cater to the volume of transaction being uploaded on GST Common Portal. Now RET 1, 2 and 3 will have facility of amendment as well. It can be revised, which is not possible in GSTR 3B within the defined time period. And even these RET 1 is going to give it to you the advantage of, you can see your credit which is being auto-populated in GST Annex 2 or provisional credit. Maybe you have availed credit on missing invoices. When you are going for RET 1, you can check auto-populated credit versus provisional credit so that you can really ask your concerned supplier to upload the invoice particulars of missing invoices on which you have availed the provisional credit. So I have tried to make this GST new return system going to be implemented from 1st April 2020. I have given overview how these are going to be filled up in new return system from 1st April 2020, and government has given a privilege we can try out. trial method. If you go to GST Common Portal www.gst.gov.in, then you can go to the tool. Tool is there which is talking about new return. There's a prototype or there's an offline tool available. You can really try out with a prototype and offline tool to prepare yourself with this new return system which is going to be implemented from 1st April 2020. I've tried to make it simple for all of us together, and we all are looking GST to be good and simple tax. I'm taking this opportunity to wish all the friends who are watching me a happy new year 2020. Thanks for watching. Thank you very much.